Let's talk about a word that stops a lot of people in their tracks: investing. Today, we're going to pull back the curtain and show you how you can get started like this week with as little as 10 bucks. No confusing jargon, no feeling like you're not in the club. Let's just dive right in.
So, does that question hit home for you? If it does, you're in exactly the right place. For most of us, the whole world of stocks and portfolios feels like some exclusive club with a secret handshake. It's all confusing charts and language we don't understand. But I'm here to tell you that's just an old story. The game has totally changed.
I want you to really let this sink in. Easier than opening a bank account. Now, that might sound totally nuts, but I promise you, it is 100% true. That's not an exaggeration. The tools we all have on our phones right now have completely smashed the old barriers to entry. Our goal today is to show you exactly how this is a fact and give you the confidence to prove it to yourself.
Okay, before we go any further, let's just get these myths out of the way for good. First, you do not need a mountain of cash. You also don't need to be some Wall Street whiz kid. You definitely don't have to spend your days glued to blinking charts. And trying to time the market, just forget it. Even the pros are terrible at that. We're going to focus on a simple, proven, and genuinely low-stress way to do this.
All right, section 1, what in the world are we even buying? It really just boils down to two key ideas: stocks and index funds. If you can wrap your head around these two things, and I promise you can, you will have 90% of the knowledge you need to start investing with real confidence. So let's start with a stock. It sounds all abstract and complicated, but it's actually incredibly simple. When you buy one share of, say, Appy stock, you are literally buying a tiny, tiny little slice of the actual company. You become a part owner. You own a piece of every iPhone, every app, every dollar of profit they bring in. That's it. It's not just a number on a screen. It's real ownership in a real business. So how does owning this tiny slice of a company actually make you money? Well, there are two really simple ways. The first is what they call price appreciation. As Apple gets bigger and more valuable, your little piece of the pie gets more valuable too. Simple, right? You can sell it for more than you paid. The second way is dividends. Think of it like a little cash bonus. The company takes some of its profits and just sends it straight to its owners, which is you, as a thank you for being an investor. Now, this slide right here highlights maybe the single most important distinction for any beginner. When people tell me they're scared of investing, what they're really picturing is the person on the right. High stress, frantic, day trading. That is not what we're talking about. We are focused squarely on the left. Simple, long-term investing. A buy and hold strategy that you can pretty much set on autopilot. This is how you build real wealth without all the stress. Okay, so if we're not trying to pick individual winning stocks, what are we buying? Well, this right here is the hero of our story, the index fund. An index fund is basically like a big basket that holds a bunch of different stocks. So with one click and for one price, you can buy a single fund that owns tiny pieces of the 500 biggest companies in the US. This is called diversification, and it's your number one way to lower your risk. If one company has a bad year, who cares? You own hundreds of others. All right, section 2. We've covered the what and the why. Now let's get down to the how. This is your practical, step-by-step guide. No more theory, just a simple, clear plan to actually make you an investor. Let's just destroy that money myth once and for all. How much do you really need to get started? $1 single dollar. That's it. Seriously. Thanks to this amazing thing called fractional shares, you don't have to save up enough money to buy one whole expensive share of a company anymore. You can just decide how much money you want to invest, even if it's just a few bucks, and buy that exact dollar amount's worth. This feature is an absolute game changer. And this is why starting small is so incredibly powerful. It's not about the dollar amount you start with. It's about giving your money as much time as possible to compound. Compounding is just this beautiful idea where your investments earn money, and then that money you just earned starts earning its own money. It's like a snowball effect. As you can see, even small, regular investments can turn into a mind-boggling amount of money over a few decades. Time is your superpower here. So where does this money actually live? You're going to use one of these 3 types of accounts. Think of them as just different buckets for your investments, and each one has its own special tax perk. First, you've got the 401k. That's the one you get through your job. It gives you a tax break today. Second is the Roth IRA, which you open on your own. With this one, you pay taxes now, but then all your money grows and comes out completely tax-free in retirement. It's amazing. And last, there's a standard brokerage account. It's the most flexible, but you do pay taxes on your profits. So which bucket should you fill up first? This is super important. Just follow this exact order. Number 1, if your job offers a 401k match, you need to contribute enough to get every single cent of that match. It's literally free money. It's a 100% return on your investment, instantly. You won't find a better deal anywhere on planet Earth. After you've gotten the full match, then you focus on a Roth IRA for that sweet tax-free growth. If you max that out, go back to your 401k, and any money left after that can go into a flexible brokerage account.
Now, to open any of these accounts, you need a brokerage. Please do not get overwhelmed by all the options out there. Just stick with one of the big, trusted names: Fidelity, Vanguard, or Charles Schwab. They're all fantastic for beginners. The only things that you need to care about right now are these: $0 commissions, the ability to buy fractional shares, and an app that's easy to use. Ignore all the other complicated stuff for now.
And here we go. This is probably the most actionable slide in this entire explainer. What should you actually buy for your very first investment? To keep it incredibly simple, just consider one of these 2 index fund ETFs. VOO tracks the S&P 500, that's the 500 biggest companies in the country. VTI is even broader. It's basically the entire US stock market. You honestly can't go wrong with either one. By buying one of these, you are instantly diversified and making a bet on the long-term growth of the entire American economy. Okay, one last little piece of jargon, I promise, and it's a super important one. It's called the expense ratio. This is just the tiny little fee the fund charges to manage everything. The funds we just talked about, VOO and VTI, have an expense ratio of around 0.03%. And as you can see, that is dirt cheap. Keeping your fees as low as humanly possible is absolutely critical, because every dollar you pay in fees is a dollar that isn't growing and compounding for your future.
So you've done it. You've made your first investment. And seriously, you should pause and give yourself a pat on the back. Getting started is the absolute biggest hurdle. But now we get to the real secret of building wealth: how you behave after you've started. This next part is all about the mindset that really moves the needle.
This right here, this is the secret weapon of almost every successful long-term investor. It's automation. Every single brokerage app will let you set up automatic transfers and investments. Just schedule a small, recurring investment for every single payday. It doesn't matter if it's $10 or $100. This does 2 incredibly powerful things. First, it builds the habit of investing, and second, it takes your emotions completely out of the decision-making process.
Okay, let's just be very clear about something. At some point, the market will drop. It's going to feel scary. Your account balance will be bright red. This is the moment that defines you as an investor. Market drops are a normal, expected part of the process. And as you can see, historically, every single crash has eventually been followed by a recovery and then new all-time highs. So what's your job when this happens? It's simple. Do nothing. Stick with your plan. In fact, you should try to see it as a sale, a chance for your automatic investments to buy up more shares at a discount.
Let's just quickly run through the classic beginner traps so you can sidestep them completely. First, don't obsess over trying to pick the next big winner stock. Just buy the whole market with an index fund. Second, do not wait for the perfect time to invest. It doesn't exist. Third, absolutely do not panic sell when the market is down. That's how you lock in your losses. And finally, only invest money that you are sure you will not need for at least 5 years.
Wow, we have covered a ton of ground. So let's bring it all home and boil it down into one final, super simple action plan. This is exactly what you can do this week to go from just learning about investing to actually being an investor. Seriously, pull out your phone and screenshot this slide right now. This is your entire game plan. This week, pick a brokerage and open an account. It takes less than 15 minutes. Then link your bank account and just transfer your first $10. That's it, first win. Then, sometime this month, use that $10 to buy your first piece of VOO or VTI and set up a small recurring auto investment. And that's it. You are officially an investor.
You've probably heard this saying before, but it is one of the wisest things ever said about money. It is so easy to kick yourself and wish you'd started sooner, but you can't change yesterday. The only thing you have control over, the only thing that matters, is what you do today. That magic of compounding needs time to work, and the absolute best day to give it that time is right now. So there you have it. The exact blueprint is right in front of you. You know what to do, how to do it, and why it's so important. The feeling of being overwhelmed is gone, and it's been replaced by a clear, simple checklist. So my final question to you is this: what is the one single step from that list that you will commit to taking this week to start building your future? Thanks for watching.